roughly 100 years ago, technology changed so that we no longer needed horses and we started to have automobiles. And you might be surprised to know there was a fairly large number of people who were employed in the horse-based economy. At one time in the US, there were 10,000 people whose job it was to shovel horse manure. They all lost their jobs, maybe thankfully, and they wound up doing other things. So this is something we've gone through over and over in history, technological innovation being disruptive, leading to some job losses, but then people wind up in new industries that nobody predicted. If you think about the introduction of the automobile, it led to the creation of many industries: fast food restaurants, motels, automotive insurance, body shops, highway construction. All these things didn't exist before the car, and all those things came along and created jobs.
Thank you for joining with us.
Yeah, thank you for coming on, Ira, very much.
My pleasure.
So my first question for you is, what is the world economy?
It's a small question.
Yeah.
What is the world economy?
Well, I'm trying to understand how it all goes together. And you, I think, seem to know how it goes together. You know, like everybody always says the economy, and then, you know, it's like, I don't even know what that really means. You know, like, how does it function? Like when we think about the United States as the economy, and we think about how, you know, then how COVID has affected the economy, you know,
Right.
And then as a world, you know, this as a test, COVID as a test, you know, what did it do to us, you know?
Well, first, the world economy is just simply the system for producing and distributing goods and services that we all need to live. So that's what the economy is. As for COVID, it certainly has disrupted, or at least initially disrupted, that system, although the system bounced back very quickly, in part because of support from government and in part because of technology. I often think, what would have happened if this pandemic had taken place back, say, in the 70s when Priscilla and I were at Vassar?
Right.
I mean, we had no internet, we had no cell phones, we had no personal computers.
Right.
We had very little ability to interact remotely other than on a phone call, very little ability to transmit information other than on a fax machine. And that was fairly new at that point. So I think it would have been, from an economic standpoint, a much greater disaster 40 or 50 years ago than it has been now. So we have technology to thank for that.
Has it been a disaster now, or have we weathered the in some sense weathered the storm?
I think we've done a good job of weathering the storm in most of the advanced economies. In some of the emerging countries, we did protect a large number of people in the sense that even though initially a lot of people lost jobs, we protected their incomes. We enabled them to continue to pay their bills, to eat, to live. We protected a lot of businesses, although many businesses were severely disrupted. So we didn't have, in the advanced economies at least, a major human disaster. In many emerging countries, on the other hand, it's been more problematic. And there's been a lot written prior to the pandemic about how over the last couple of decades, many emerging countries have grown rapidly. They've caught up. They've improved their position vis-a-vis the rich countries. That process was severely disrupted by the pandemic and reversed partly. And it will probably take some time before they get back to where they had planned to be. So I think the greater human cost has been in emerging countries.
And is that people who were making $1 a day have gone down to 50 cents? Like, what is the cost of this disruption?
Well, I think there's probably a lot of hidden unemployment in emerging countries. There has been a weakening of economic growth or a loss of economic activity, in part because of the pandemic itself directly, in part because of the indirect effect of an initial weakening of exports to advanced economies, although that's starting to reverse. But the main thing is the pandemic itself and the fact that vaccination rates in the poorest countries are very low. The World Bank tells us that in the most poor countries, only 4% of the population is vaccinated, whereas here in the United States, it's somewhere over 60%. Many European countries, it's over 70%. And that fact means that these countries are far more vulnerable to continued outbreaks, which have a significant impact on public health, obviously, but also have an economic impact as well.
Where were we right before the pandemic? Like, what was happening in the world economy? Were we heading towards, a crash anyway? I mean, what was going on? And then you talk also about putting the economy in a coma. I think I saw something where you
Right.
talk about that. I'd love to kind of hear a little bit about
Okay.
that. But
Well, with respect to the coma, the idea when the pandemic first emerged was that the best way to fight it was to keep people apart. And the best way to do that would be to temporarily put the economy into a coma, that is, stop those forms of economic activity that involve social interaction and use the government to compensate the people who were disrupted by that. That would have been the best way to limit transmission. Unfortunately, I don't think we did it long enough and we didn't do it well enough. So we wound up with a longer and more disruptive pandemic than we probably should have had. But in any event, that's water under the bridge. As to your question about where we were prior to the pandemic, we had by early 2020, we were looking at a decade of continuous economic growth here in the US and in many other advanced economies. So in that sense, we were doing well. On the other hand, we were in the midst of a trade war. The US had, over the past couple of years before that, implemented pretty severe tariffs on China and other countries. There was retaliation against that. That had a negative impact on trade, on business investment and business confidence. And we had already seen a near inversion of the yield curve, which is often a signal that a recession is coming. So, as recently as late 2019, I was writing that we were at risk of a recession in 2020 because of what this trade war was doing to economic activity. Now, in the end, we did have a recession in 2020, but it wasn't because of that. So that's kind of where we were. But we were also in an environment where economic growth was relatively slow, productivity growth was slow, inflation was very low. That was just the nature of the global economy. Now we're looking at faster economic growth. We're looking at an acceleration in productivity growth, in part because the pandemic generated more digital transformation. And now we're in the midst of very high inflation, the likes of which we haven't seen for a very long time.
I mean, it's crazy.
Mhm.
It seems crazy to me. Is that a global phenomenon as well, or are we just seeing it here in the
Yes. Oh, no, it's definitely a global phenomenon. We've seen a sharp rise in inflation in the US and Canada, in the UK, in the Eurozone. Even in Japan, long suffering from deflation, they've seen a modest increase in inflation. And in many emerging countries, we've seen a sharp increase in inflation. And my view is that it's principally the result of the supply chain disruption that came about because of the pandemic. On the one hand, we had a very sharp increase in consumer spending on goods, partly because of fiscal stimulus, that was part of it, but more because consumers made a shift away from spending on services in order to avoid social interaction and spending more on goods. And that's especially true here in the US, but also true in other countries. So during the pandemic, we saw lots of people cut back on spending at restaurants, getting on airplanes, going to hotels, and spending more on things for the home, electronics, furniture, appliances, treadmills that they probably didn't use. And, that created.
Lumber, sir. The building of people's
Oh,
homes.
yeah. And there was a big increase in housing activity as people moved to bigger homes to have home offices and home gyms and stuff like that. So this huge increase in the demand for goods came at the same time that businesses, especially in East Asia, were struggling to meet already existing demand given the disruption of the pandemic. So, for example, the zero tolerance policy in China, whereby if one person in a factory gets infected, they shut the factory down. We've seen a drop in the number of passenger planes flying, and they carry a lot of high value merchandise in their underbellies. We saw a lot of companies fearful of shortages hoard commodities and inputs, which made sense for them individually. But when every company does that, that exacerbates the problem of shortages. So all these things were happening on both the demand and supply side that disrupted supply chains and led to a big increase in costs. And the evidence that the inflation we're experiencing is really a supply chain issue is the fact that most of the inflation has been for goods and not for services. And it's goods that were disrupted by supply chain problems.
So, if you look at it, you would get some understanding of what these issues are. What levers as a nation do we have to be pointing ourselves at the best direction? And how do we even know what the best direction is?
Well, I mean, we have a number of levers, in fact. The major tools of government for affecting the economy are fiscal and monetary policy. When you have inflation, what you usually do is withdraw fiscal and monetary stimulus. And in fact, that's what we're doing right now. So the government borrowed a lot of money last year, but they're going to borrow much less money this year. So that is a fiscal contraction. The Federal Reserve, which controls monetary policy, is already planning to end its purchases of government bonds and possibly start selling them. And they're probably going to increase interest rates a number of times this year. That helps to reduce credit market activity and suppress economic activity in a way that reduces inflationary pressures. Now, that being said, that doesn't really affect the supply chain issue, which is causing the inflation problem. But my view is that the supply chain problems will largely go away on their own. And we're already starting to see that. We're starting to see some weakness in consumer spending on goods. And that makes sense because really at the end of the day, how many treadmills can you buy for one house? So we've kind of,
if people would buy bikes, then they'd be better. They'd be using their bikes more than their treadmills.
I don't know. I like my treadmill, but
well, I like my bike. Okay, we can debate that later.
I like my bike, but I moved recently to a hillier area, so it's a little bit harder to ride a bike. But that being said, on the supply side, there are some indications that supply chain disruption is starting to abate. We've seen some indicators suggesting that shortages, that delays, that backlogs are starting to get a little bit better. We've seen an acceleration in industrial production in East Asia, which is a sign that factories there are facing fewer shortages of the components they needed. One of the big shortages was semiconductors, which severely disrupted the automotive industry. And now we're seeing the automotive industry coming back, which suggests that the semiconductor situation is improving. That interestingly led to a huge increase in the price of used cars. That had nothing to do with monetary and fiscal stimulus. It had to do with the fact that during the pandemic, because of this massive shift to remote interaction, there was a big increase in demand for information technology. That meant semiconductors, and that hurt availability of semiconductors for automotive companies. So a lot of interesting chains in this process. But again, I think gradually over time, the supply chain disruption will dissipate. Then we'll see inflation dissipate as well. That's my baseline forecast. I could be wrong, although that's never happened before. But that might happen.
So now, why is it important, that we have an agreement with Canada and Mexico about what we can work on together, or the Eurozone? Why do those things become important? Why does it matter if England is in the Eurozone or not in the Eurozone?
I'm sorry, my doorbell is ringing.
You want to grab it?
Yeah, because I'm home alone.
Okay.
Be careful out there.
All right, I'll be right back. Okay, it's my smoked salmon from Zabar's.
Oh my God, that is so exciting.
I got smoked salmon from Zabar's, and I ordered some bagels from Montreal, because apparently they have.
Oh my goodness gracious. So the goods
I guess you didn't have any supply chain issues.
Yeah. Oh my gosh. Okay, that's hysterical. Okay, yeah, exactly. All right. So anyway, Jesse was asking about the need for, I guess, cooperate or.
Well, why do these cooperations matter? Does it make them able to compete against other nations, or?
Well, trade matters a great deal, as do capital flows, because we gain from having more efficient production and distribution. If nobody traded with anybody, everybody would have to produce everything on their own. That wouldn't be very efficient. So the more we trade, the more you can allocate resources in an efficient way that reduces costs and reduces prices for consumers. The shift toward freer trade here in the US, for example, over the last 40 or 50 years, probably had a hugely positive impact on the purchasing power of lower income Americans. The fact that people can go to a discount store and buy clothing and appliances and furniture really cheap compared to what they paid years ago has a lot to do with trade.
Right.
So the fact that in recent years we've seen a reversion, more protectionism by the US, the exit from the EU by the UK, trade disputes between different countries, higher tariffs, restrictions on trade, those things in the end have a negative impact on economic activity, on consumer purchasing power, on efficiency, on innovation. So I think from a government policy perspective, we'd be better off undertaking more trade liberalization. Now, the problem is that in recent years, we've seen a populist backlash against globalization because we did see a rise in income inequality. We did see some segments of society feel left behind with higher unemployment, lower labor force participation, stagnant real wages. And I think the people that suffered were amenable to the argument that they were suffering because of globalization, because of competition of goods from overseas, because of competition from immigrants. So people became averse to trade, to migration. But I think my own view is that the rise in income inequality and the problems that some workers faced had more to do with technological innovation and the fact that technology disrupted certain industries, led to certain job losses and stagnant incomes. And the problem was that because there was a sharp shift in the type of labor being demanded, and there was not a commensurate change in the skills mix of the labor force, we wound up with a skills mismatch and rising income inequality.
So when you look at that, over time, if technology can make, we can do something with a lot less people, ultimately it'll be less expensive. Where do you see it going if we have less and less jobs? And over time, the World Health Organization has us coming back down this curve. I don't know, they keep extending it, but I think it's like 8 or 9 billion, and then it starts to come down. Are we not going to have it sort of work out? Is technology moving faster than
Wait, just are you just explain one thing, Jesse? Are you talking about populations declining and not having people? Or are you
well, I imagine that over time, the curve on population, at least for now, looks like this, right?
Yeah.
And, technology wise, there's going to be less people who can get jobs, and a lot of people say like, oh, well, they're going to be artisanal, doing things in their backyard that they'll make money on, but what's gonna happen?
Yeah, I mean, think about it this way: 100 years ago, close to half the labor force in this country were farmers. And then farming became enormously efficient through technology, and lots of farmers lost their jobs doing farming. We don't have half the population unemployed today because of that. Those people moved into other industries. With lower food prices, the society had more income available to spend on other things. Demand for other things increased. Jobs were created in other industries, and people made the transition. Likewise, roughly 100 years ago, technology changed so that we no longer needed horses and we started to have automobiles. And you might be surprised to know there was a fairly large number of people who were employed in the horse-based economy. At one time in the US, there were 10,000 people whose job it was to shovel horse manure. They all lost their jobs, maybe thankfully, and they wound up doing other things. So this is something we've gone through over and over in history. Technological innovation being disruptive, leading to some job losses, but then people wind up in new industries that nobody predicted. If you think about the introduction of the automobile, it led to the creation of many industries: fast food restaurants, motels, automotive insurance, body shops, highway construction. All these things didn't exist before the car, and all those things came along and created jobs. So the challenge now with information technology is, yes, it has increased automation in factories and led to the loss of many manufacturing jobs. And you see communities in the Midwest where there's a lot of unemployment and resentment because of that, and understandably so. But we haven't had mass unemployment. Right now, we have a very low unemployment rate. There are a couple of challenges. One is that when people lose those jobs, let's see what we can do to help them make the transition. Because it's clear that for the society overall, these technologies have a positive impact. But there are winners and losers. The challenge is to make it possible for the winners to compensate the losers so that everybody is better off. And we haven't done a good job of that in terms of public policy.
Well, first of all, how would we do that? And the second part of the question has to do with labor, which is, at least at the end of, the last 6 months or so, we see that, we can't fill our jobs. There's a lot of,
Right.
At least in the service industry, you hear a lot about that.
Yes.
So where are all those people going and how are they surviving
if they decide that they're just not going to work, you know?
Yeah, well, I mean, this is what you're talking about is actually related to the pandemic. And it's been interesting, not just in the US, but in many countries, we've seen a significant drop in labor force participation. That is, the number of people willing to work who could. In part, it reflected people not being able to take care of children who were not in school or daycare full time. So here in the US, we saw a pretty sharp drop in the share of college educated women participating in the labor force. Many of them were parents and decided to quit their jobs so they could take care of their kids. We saw a lot of older workers retire early. People saved a lot during the pandemic. They saw their 401ks go up in value. They saw their homes go up in value. They felt richer and they felt financially comfortable retiring earlier than they previously planned. And those people are probably not coming back. Some people dropped out of the labor force because the only jobs they could do involved social interaction and they were fearful of the virus. And some people dropped out because of a skills mismatch. So, for example, people might have lost jobs when stores closed because people are shopping online more, and maybe they didn't have the skills needed for the jobs being created in other industries. So that, along with a sharp drop in my immigration, explains the labor shortage that we're seeing now. And it's real. I mean, I hear about it from many of our clients in many industries. What's surprising about it, though, is that when you have a shortage of labor, you would expect to see a huge increase in wages, and we haven't.
Okay, why not?
Well, that's a question. We did see a big increase in one industry, leisure and hospitality, which is restaurants, movie theaters, hotels, very labor intensive. If you can't get the labor, you can't provide the service. So in that industry, they're willing to offer much higher wages. But in many other industries, although we've seen an acceleration in wages, it's not enough to generate kind of a wage price spiral that would fuel future inflation. I think many businesses are holding back on big wage increases, and instead they're doing things like retention bonuses and signing bonuses, kind of one-off payments rather than a permanent increase in wages. And we're also seeing many companies investing in labor saving or labor augmenting technologies in order to boost the productivity of the labor force they have. So, nowadays you go into a restaurant, you don't get a menu, you see a QR code on the table and you photograph it, you order your food, much less labor involved. So that's just a small example of how we're using technology to deal with the labor problem. And we have seen an acceleration in productivity, which also helps to alleviate some of the inflationary pressure.
Do you envision a time where universal basic income would be a solution to societal problems, or is it just sort of a fantasy that doesn't ever really come into play?
I don't know. I mean, this is a political issue that has been debated. There have been a couple of small experiments with the universal basic income, which, as far as I understand, have been reasonably successful. I think there is a general consensus in our society that everybody should be guaranteed some income. And that's why, for example, we have the earned income tax credit. But I think a better solution to the longer term problem, the skills mismatch in society, is to invest in human capital, to invest in education. And one problem we have in this country is education at the tertiary level is hugely expensive. There are a lot of disrupted workers who could stand to go back to school and get the training needed to do new things. We did actually see that to some degree after the last recession back in 2010. We saw a sharp increase in student debt, and a lot of people were alarmed by this. But the reality is that debt was taken on because a lot of people decided to go back to school. Mm-hmm. People who had lost jobs, say, in real estate when that was shaken by the subprime crisis, went back to school and studied things like healthcare, becoming maybe nurses or respiratory therapists.
And now they all just quit.
Yeah, well, they've been through a rough time during the pandemic. So. Yeah. And the other thing is we have less immigration. And we had, as a society, hired a lot of nurses from overseas. Mm-hmm. So without immigration, we've got a labor shortage there.
Storms are getting more damaging, winters lasting longer, summers are hotter. We're seeing environmental changes. And for me, it's very hard to predict what they might be or where they are or how they're going to, I'm not sure anybody really knows. So how do you think about that going forward? Like, how do you position people you're working with to have a thought about what they can be doing, with their business?
Well, I think there is a growing consensus in our society that climate change is real, it's disruptive, it's worrisome, and that we need to do something about it. And the best way to deal with it is to quickly make the transition to a clean energy economy. I'm not a scientist, so I don't know how much of that transition or how fast that transition is needed to actually make a difference in terms of climate change. I don't know if it's too late, but certainly it should be tried. And it's maybe a bit surprising to me how quickly we're starting to make that transition. We are now in the midst of a pretty rapid shift to electric vehicles, not just here in the US, but especially in Europe and in other parts of the world. We've had probably inadequate investment in carbon-based fuels because there's more investment taking place in clean fuels for electric generation. So it's a tough transition, but it's interesting to me that aside from the fact that many governments are now imposing rules to affect this transition, the private sector is also starting to take it very seriously. So, for example, a lot of asset management companies that manage trillions of dollars in assets have committed to divesting from companies that produce carbon-based fuels and focus more on the clean economy. We've seen financial institutions like banks, insurance companies, and asset managers increasingly allocate portfolios and evaluate risk on the basis of climate concerns. And as they do that, that compels non-financial companies to act accordingly. So I think we're moving in the right direction.
Right.
But even so, we're still likely in the coming decade or two to have a lot of climate-related events that we didn't have to deal with in the past. And that will likely affect investment decisions, location decisions, how properties are built and where they're built, that sort of thing.
What's going to happen with cryptocurrency? Will it have an impact on global economy, and sort of just thinking about what is going to be the role really of crypto?
I don't expect a big role. I don't expect it to play a big role as a currency in terms of transactions or asset retention. A currency that's used for transactions should have a stable value. That's what you want in money. And the cryptocurrencies are not stable in value. Moreover, the best known cryptocurrency, the algorithm that produces it, is meant to have a final value. That is, it's meant to have a final supply of that currency. We don't have a final supply of dollars. The quantity of dollars is always rising in line with the growth of the economy. If it didn't, then the only way you could have a growing economy with a finite currency is to have declining prices. That would mean deflation, and that's hugely disruptive. That's not optimal. That leads to high real interest rates and a whole host of other problems. So right now, it appears that cryptos are mainly a speculative investment, and some people have made a lot of money from them, but some people have also lost a lot of money. I guess the beauty of crypto is that you maintain privacy. It's a good way to hide what you're doing. I think a more likely thing is the adoption of digital currencies by central banks. We're seeing some central banks experiment with that, including the People's Bank of China, where they've experimented with it at the Olympics recently. The problem with digital central bank issued currency is that there's no privacy. Central bank knows every transaction that you make, and that's not necessarily a good thing either.
Yeah.
So I'm not sure where we're going, but I don't see private crypto as being sustainable as a currency going forward.
We do hear, I mean, whether it's true or not, but the people in developing countries have access to using this form of currency in a way that they couldn't get a bank account. They're able to get through a system, so there's more flow, there's more economic flow. Does that have any role in thinking about forecasting the economy?
I'm not familiar with that. And one of the things we've seen in a number of emerging countries is more use of mobile technology for transactions. And we've seen that in East Africa and West Africa too, for example. I think that's very significant. It creates greater efficiency. It allows for more efficient transmission and use of information. If there's a lack of access to credit in emerging countries, I don't think that crypto is the solution to that. I think the solution is for better governance in those countries, including by their central banks, more stable values of their currencies, and more transparent and well-regulated financial markets. So that would be the solution to allow poor people in poor countries to have access to credit.
So, these issues we're talking about, when you talk to a person you're working with, are you talking to them about risk? Is risk the main thing to communicate about these issues so that a business can make better decisions about the future?
Well, risk is part of it, certainly. I mean, part of my job is to highlight what risks are out there, but also to highlight what's happening and what's likely to happen. What are some of the scenarios? And what we try to do at Deloitte is to help our clients manage different scenarios and manage risk too. So that's an important consideration in business, certainly.
When we talk about the US, right, if we have a recession here, we have, the government can make certain decisions about it. But as a world, is it more, 50 years ago, we were a primary, market, in the world. But now it seems like there's markets everywhere. So has the fact that it's more decentralized play a role in making it harder for us to impact not having a recession here?
No, I don't think so. Well, first of all, we're still the largest economy in the world by far.
Mm-hmm.
We're still the most powerful country, not just in military terms, but in economic terms, in social terms, in technology terms.
Isn't China coming up, or?
China's economy is expected to maybe surpass nominal GDP of the US by the end of this decade. Maybe. We don't know for sure. But that is mainly a reflection of the fact they have a whole lot more people than we do.
Mm-hmm.
More than 4 times as many people as we do. So even if they were to have the same GDP as us, they still have 1/4 of our per capita GDP. But meanwhile, the US is still the dominant economy. We're still the dominant place for technological innovation. We still have the dominant currency that's used in global markets, which gives us many privileges. And we're still about 20% of global GDP. And as far as our ability to fight recession, that's unrelated to the size of our economy. It's just related more to the nature of our economy and the nature of the tools that our authorities have to try to influence the economy.
So are you optimistic for the future? Are you an optimist?
That's a good question. Well, yes and no. Based on a long, long history, I'm optimistic that human ingenuity will generate innovations that will enable us to solve problems. And we've done that before. I mean, I remember 50 years ago when we had the first oil crisis and people were worried, how are we going to manage in a world of a growing economy with so much dependence on oil? But the reality is we did. And we use about half as much oil per real dollar of GDP today as we did 50 years ago. We became much more efficient in our use of energy. So we reacted to higher energy prices by investing in greater efficiency. And we were innovative too. And I think we'll be innovative in the future. What worries me is this backlash against globalization, backlash against immigration, which is sometimes tinged with racism. That worries me, that we may move away from accepting the things that do tend to benefit us. And that could slow down that process of innovation and probably exacerbate some of the social tensions and income inequality that we have. So if you look at history, it's a series of ups and downs, but with a positive long-term trajectory. So long-term, I'm optimistic, but in the short term, I think we could have some pretty big hiccups.
Yikes.
Yeah.
Wow. Thanks, Ira, for coming on. This was really
Yeah.
illuminating to me. For me personally, it made a lot of sense. It was wonderful. I'm worried about your locks. It should be in the refrigerator.
Oh yeah. Well, don't worry. I mean, they pack it with dry ice, so
Yeah.
it'll be okay. But
Yeah. Ira, thank you very much.
Yeah,
This is very illuminating. Really appreciate it.
my pleasure. Thanks very much.
Be well.
Thank you. We'll see you soon.
Take
Bye.
care.